Hi there, welcome to the Ecofinar financial channel. My name is Philip, and as usual, I'll be talking something related to finance, investment, and the economy. If that is your interest, then this is the right channel for you. Please subscribe and also set up the notification so that you can receive regular updates from this channel. Today's topic is savings is costly and investing is risky. So, which one is the best for you, really? So we'll just be looking at it from the perspective of somebody who likes to save, and then we'll look at it also from the perspective of someone who wants to invest. Unfortunately, in an environment like this all over the world, it's difficult to see which part is the best. But we would look at it in sequence and then give you our opinion on where you should probably be investing or saving your money in as a matter of just for this period. So yes, there are a lot of people who love to see money in their accounts. They will rather hold it that way just to conserve and preserve capital. They do not want to take any risk with it. They're just looking for a way to keep it the way it is so that they can use it for whatever they want to do. So savings is more or less like setting money aside from what is left, of course, after all the basic needs have been met, and then you set aside some money to save. So you can be that you're saving just for the future. It can be that you're saving to fund education. It can be that you're saving to buy a new house, to buy a car, to go on vacation. There are several reasons. But usually, when it comes to savings, the emphasis is on not making any loss. You just want to preserve the capital you want have. It is true that some savings accounts have some level of interest, but it's usually very low. Of course, savers do not mind because the essence of keeping the money is really not for the interest, but for the sake that the money can be kept the way it is, which is what savers do. But when it comes to investors, there is a wide spectrum of investors, from the very low risk people who invest in government bonds and treasury bills, and to the very extreme where people invest in assets like cryptocurrencies. But regardless of where you stand on the investment spectrum, the point is that investors take a bit more risk than savers do. They are ready to risk some of their capital in order to generate a higher level of wealth. So that's the basic difference between investors and savers. But considering the environment we are in now, where the inflation rate is rising so high, it means that those who save, are saving at a costly rate. And this is because inflation is now rising higher than it used to be, and even disposable income is lower than it used to be because, of course, prices of goods and services are rising. And also the fact that with inflation rising, it means that the value of money now or saved, might not be the same. In fact, if you're, for instance, planning to buy a car in future and you're saving towards it, now that prices have gone high, it means that it will take you a longer time even to be able to meet up with your goals. So is that really the best option, given that prices are rising and what you're even saving might take you a longer time? Then for investors also, the market is a bit risky. Of course, the government is trying to control inflation across countries. So they're taking a lot of measures, including increasing interest rates. So if you decide to invest in the stock market, it's been bearish at least for some time, and some of the other assets also due to the uncertainty in the global economic market. So if you do decide to invest as well, you stand the risk of losing some of your capital because the environment is a bit risky right now. So what do you do given both options? The truth is that you still have to find the right balance. The balance is that if you have an immediate need or something that you know you need liquidity for in the near future, then you can still keep it as savings, but you know that you have to save a little bit more to accommodate changes in prices. Now, for what is left, it will be good to invest that, so that at least you can grow that at the rate of inflation. It might be difficult to find the right assets, but it's still better to invest in probably government securities like treasury bills and bonds, which are still yielding a little a low level of interest, than to keep it in savings, because that way at least you reduce the uh, value, you reduce the risk a little bit. And if you're an investor or somebody who knows that you want to take a long-term view, then this is probably the best time to identify assets, maybe in the stock market and even in other areas where you can invest in now, and then reap each benefits in future. But if you're going to do that, it will be good to talk to a financial advisor or to do your own extensive research to be sure that what you're investing in is something that, of course, really has long-term value. So that's our advice. I would like to know what you're doing to balance the savings and investments, or to do within the trade-off of savings and investment. Let us know in the comment section. And that's our edition for this week. We'll be back with you next time. See you then.